All right, let's talk about XLM Stellar Lumens, ticker symbol in crypto XLM Lumens, Stellar Lumens. All right, so we've lost a lot of important levels today on the push down, much like the stock market and most of the other major cryptos. What we're looking at here is we've been pushed down below this 1180 level, and we found support right here around the 1160s, which if you look back in the past, you can find some confluence in history with this range. So there is, possibility of holding support in this 1160. And with the major stock markets now closed, we could possibly start to get some ranging and some slow momentum and try to push back up here towards this magnet at the 1180 range. If you were to bust back into this higher portion of this in this box right here, to me, if you're scalping or playing with leverage or whatever, and you're buying at these lows, I'd be selling in these ranges. And you get into here, that's kind of your golden moneymaker on short trades. Stacking little percentages. Once you get up to this first line, I would be very careful. It's what the hammer's here for, and there's good chance this is where the bears step in and start to push you down. However, if you get lucky and you get some game and your position starts going well and there's some momentum in the markets and it comes up and it cracks right through and comes up, even if you're starting to wick up into these areas, that's what a bear trap, that's what a bull trap is made of by the bears for you. So if you come up to this range, don't just think that, oh, now I'm good. Maybe if on a higher time frame you zoom out and on like the 4 hour or something, over the course of the next day or two, you start to hold support up here, then you can look for that. But if you're day trading this and you're scalp trading this, and say you're going to be up tonight, trading this into the evening, or you like to trade through the night or whatever, and as the Asian markets get going, you often see Bitcoin and Ethereum pump, and you're like, oh well, and I'm going to take that pump and use it here, which that's a good theory. When you get up here, don't start thinking you're going to the moon without creating some structure and coming back for a legitimate retest and closing bodies of candles up here. The bigger hammer is here for a reason. It's to tell you that this is most likely going to be a point that you get smashed back down. If you are pushing hard up into here, maybe it'll come down and hold here, and you will start trending on this line for a little bit. That could happen too. But in the grander scheme of things, sadly, most likely tomorrow the markets are, looking at more turmoil. I mean, is it possible that we get good news from the Fed? Yeah, anything is possible, but so far the consistency has been that these reports come in hot, and the reports start coming out from the Feds for the stock market tomorrow. And the crypto markets follow the stock markets. So until we decouple Bitcoin and Ethereum from that, these things are just following Bitcoin and Ethereum. So if you do get ran up into these ranges and you start, feeling good and you're trading through the wee hours of the night, late into the night, early tomorrow morning, pay attention to where you're at globally. You're controlled by the stock market, and as futures start opening and other people start making moves, and a lot of times you start seeing the bigger moves made if you're trading in the United States on the West Coast, then per our time frame, what I usually see is somewhere between like 11:30 p.m. and 1 a.m. You'll often find sell-offs as other markets open up and other bears step in and take control of whatever bullish action we're doing. Should they go and run it up and you start feeling euphoric up in this area, remember to watch the clock as you get around to when it's going to be stock market open time around 9 a.m. Eastern Standard Time and around 6 a.m. Western or Central Standard Time, Pacific Standard Time, whatever you want to call it. If you're over here on the East Coast in the United States, then you need to be cognizant of the fact that when the markets open, if they start dumping, then these things are going to go down. They're going to go down hard. And if these ranges on the floor are already tested a lot and the bears manage to keep pushing, when you're thinking of it as support, think of each one of these hits that we can't then go up if you're a bull and make a new level. The more times you start tapping on this, you can almost, pretend like it's the bears coming through with a jackhammer or something. And the more times they touch this and pull your liquidity and start to exhaust the buying power, is the sooner that it ends up going down. You don't just keep tapping here forever, because if that was the case, you just have no volatility, and these are highly volatile markets, so they move at these levels for a reason. So continue to monitor your levels and continue to keep realistic expectations in mind. If you lose these levels, then real support is it doesn't start until you drop all the way down to about 10 cents after this. And then after that, when you look back in history, let's zoom out, let's go to a higher time frame, let's go even higher than that, let's go look at the weekly and make this simple for a minute. Zoom back and look at some history here. You see that spread this out a little bit for you. Let's go back in time and do a little history real quick. You look at, these charts start charting on TradingView, going back here to 2018, and this thing traded, for a while in a range between 17 cents and about 35 cents. So as we lose that 35, level, if we lose the 39, we go to 35, then we lose the 35 level. Realize that back in history, you didn't have structure until you came in over here. And then realize that as this moved forward and it went into its, bear market afterwards, and you see what it did actually, what you realize is, at one point it went almost to zero. It was scary. But you realize that your next levels down that you have any confluence with is you come down here and you look at where this bottom was, around 8 cents, and you had peaks here around 8 cents. And then you continue dragging over and you see that, you continue to see some confluence with that idea. So, that's your next best hope, is you drop down and you hold a 6 to 8 cent range, worst case scenario. Now, moving back to a more optimistic view on that, you've got the idea that, this is kind of crazy, but you got the idea that there's a little bit of support and a little bit of history in here in the 12 cent range. And there's a little bit in here, right here at about 25 to, let's see, what is that? 23 actually. Came down as low as 23. You start counting this next level up. You've got a level that traded between actually this wick was at 21. And then these wicks wicked into like 22.69. So, look left and you've got some similar marks here. So let's call it 21. You've got a range between 21 cents all the way back up to the 40 cents back with history. So if you, continue going over and looking at that and you say, well, maybe we're just going to drop back down and, do something like that. That's kind of what you got. But if you lose those levels, be cognizant of the fact of where you can go, have realistic expectations in mind. And also back to a more optimistic outlook, you can see that back in time in a bear market, it once went, well, just can't even talk now. You once went all the way down here and you almost hit the bottom of 2 cents. It stayed at like a 231. Let's see what that wick is. Wick down to maybe not even 2.3. I guess maybe like a 2.48. So let's just call it 0.025. So 2.5 cents. That's where it went after, in the last bear market, after being a 35 cent peak. You went down to 2.5 cents. After that, though, it still came back. So there's your optimistic look, is cryptos do these crazy things and they can come all the way back. But also, like I said, be aware of just how crazy these things can get. Now, obviously we've made much higher all-time highs, have much more institutional buying, have a much stronger support base of fans and legitimate lifers for ADA. ADA has one of the strongest communities. That's for sure. I mean, the ADA people are very strong. So they alone might truly defend some of these other levels. I mean, yeah, if you want the optimistic look, I'd say that anywhere in that 6 to 8 cents is worth getting kind of frisky and backing up the truck and just you buy. This whole zone would be a golden zone to buy, and you just hope that the ADA community and the future of what's gone on and just all these present things come into play, how much more it's grown, how much more development, how many more apps, all these different things, and you just figure you'll hopefully hold this line. You'll hold this I mean, there was Wix once down here into, if you counted that one, that's like four. No, let's just stick with this. You wouldn't want to lose 5 to 6 cents. I mean, you really wouldn't. After that, it gets quite strange really fast. But you could also say, if you look in history, it's never been below 2.5 cents. Maybe that's your saving grace in your mind. But, ultimately, each person is trading with a different horizon. Each person is trading with different goals in mind. I mean, obviously, we all want to make money. But, some people are trading for the week. Some people are trading for the month. Some people are trading for the hour. Some people are, just here to buy because this is money they don't need at all, and they truly believe that a lot of these cryptos are just gonna blow up and be huge and just worth so much more money in the next 3 to 5 or 5 to 10 years. If that's your outlook, I agree with it, and I think that ADA has a future, has a strong foundation, and has at least one more bull run in it where it goes back up and does something like $3 to $5, or goes and does something crazy like $8 to $12. So those are your optimistic outlooks on this, especially if you're buying for a longer term horizon. But if you're buying right now to trade right now and you need your profits within the next few days, you need to be realistic about these levels and what it takes to get up above and back through them. And also, the possibility of going below them and your position getting wrecked if you're completely all in, especially on leverage, and that's it, you get liquidated. So once again, as I keep saying, it's a bear market, we're in a downtrend, and capital preservation is most important. It's most important that you're still here and you still want to trade in the next bull run. Don't allow this downward trend to chop you up, and then you're not here later. You have no capital or just no stomach for it because you've lost so much capital. So I'm going to cut that off right there. If anybody has any requests or anything that they'd like to know, and you can just ask in the comments. I'm happy to try to help people out. If you say, hey, where do you think this is going to be in 5 years, or I'm buying for 10 years, or hey, I'm stuck at a certain position, what do I do at this point moving forward if I need to make a decision in 3 days, 5 days, 3 months, 5 months. I don't mind trying to go over various scenarios for people, and I'll do my best to answer as much as I can in the comments, and just try to help people out. I know that this isn't for everybody, and crypto should be, and the future of investing should be for everybody. It's kind of the whole Robinhood trend has started that, and as you can see, we're possibly about to lose this level while we're closing this video. If it gets too much crazier, I will look to make you guys another video update. As I look away, I see major charts for like Bitcoin, Ethereum. They're green and going up right now. So this is something to be worried about. Why is this pushing down when everything else is starting to push up right now? All right, you guys, trade.